How's everyone doing? Well, I want to thank IFAH for allowing me to come up here and speak about accounting and reporting. My name is Will Schmidt, and just a little bit about me to understand why I'm even up here. I started with in healthcare with a small retail and specialty pharmacy. And within about 4 years, we went from 1 million annual sales to 487 million. We expanded and grew across 33 states across the United States. And then when we were sold to a big conglomerate, then I stayed on board for about 2 years and helped turn around their about 12 of 16 months slide into a 5 quarter-over-quarter growth, double digits, which they hadn't seen in close to 3 years. So what I'm going to try to do today is talk about two things which a lot of people don't want to put in the same sentence, which is patient care and profits. And so before you guys start picking your bags and running for a bathroom break, I'm going to try to make this as fun and interactive as possible. When we're talking about accounting, a lot of people think it's just about numbers. And I'm going to try to relate numbers to people. And if you can do that as an organization, you can not only increase your profitability, you can increase the level of care that you're providing. So those are the companies, quite frankly, right now that I'm on the board of directors with. I own the RxSuccess, and a lot of these companies are under one major umbrella. So what we've tried to do is organize each one of these companies to target a specific patient population with measurable metrics. So instead of offering one large organization, which a lot of people do, what we've done is keep each company focused on one particular aspect of the market, so our metrics are so much easier to manage, which was spoken in our last presentation. So really what I'm going to try to do today is just basically open up a conversation, and I'm going to make it interactive. So when I ask a question, hopefully you guys raise your hand, say yes or no. I want a little bit of participation, and it'll go a little bit easier. So what I'm going to do right here is I'm going to question you to the point where you start looking at the people within your organizations, you start wondering about assets and liabilities, and hopefully you use that pad right there to take some notes. And when you go back into your companies, you're asking questions on how do I improve in particular areas? Is this a metric that my company needs to look at? Is it a KPI that we should be considering every single day? Because when I sit on the board and I hear people come and talk, I hear them talk about things that they're looking at a quarterly rate. You cannot do that as a company. Healthcare changes way too fast. You need to lower the amount of KPIs that you have, and you need to focus on them on a daily aspect. If you do not have the technology currently to look at those top 5, 10, or 15 KPIs in your company on a daily basis, you are losing profit. It's falling out, it's falling by the wayside. So what I'm going to try to do here is I want you to take that notepad, and I want you to put a line. Let me see here. Oh, hold on a second. So if you can increase your profits, you can offer more services. We can all agree that, right? But the thing is that you don't increase the quality of your services today, your profits are going to hinder by tomorrow. So the key is that most companies don't set those metrics so that they can automatically go to it and have that meeting once a week, once a quarter, whatever it is, and everybody's talking the same language, which is one of the reasons why blockchain and technology are so important into our companies. If we have different reporting aspects within our own company, and then we look towards different companies, like for example, one of the major companies that I oversee is a pharmacy, okay? And we deal with PBMs, we deal with the medical groups in there, we deal with the caretakers. If everybody has a different language, you have just pandemonium. So the easiest way to do this is to develop technology where everybody understands the same metric and the same language. And that's where I think that blockchain could be a very, very progressive and helpful. But like just stated, I do think it's anywhere from 5 to 15 years out because of the HIPAA and the PHI issues that we have, that nothing is hackable. So what I'm looking here is that we're going to go into assets and liabilities. And I find that most companies, and there's probably a lot of very smart people and individuals in this room that understand the two, assets are easy. They're anything that puts money in your pocket. The problem is liabilities, and this is what's driving a lot of companies into the merger and acquisition world where you're getting gulped up, okay, and I was actually part of that. So the liabilities issue is anything that's taking out of your pocket, okay, that's not providing a repeatable, profitable income every single month. Now, I'm not talking about like I had 8 good months and I had 4 bad months. That's a liability. That's not repeatable. What I would look at is a smaller margin, but it's repeatable and I know what's going to be coming every single month. I can build upon that. If I have a market that's going up and down, to me that's a liability because then it makes the cash flow, which is key in every single company, questionable. And that's what I would look at when you're investing in going into partnerships, whether it's a contract, whether it's acquiring another company. You need to see, I would rather have that slight increase in a company in a linear aspect than a person that jumps up to the top because they're going to jump back down. I look for repeatable processes, and I would really suggest you guys look at that too as well. So basically what you're looking for in liabilities is not something that just provided a loss 1 month, but can it be systemized? Can you provide a metric? Because if you have a metric, then it's very easy to correct it. But if it's that up and down that we see, like a fast stock or a fast company that's rising really quickly, I'm wondering, did they just jump on a train and immediately they got the profits? What happens when the market catches up to them? Since I'm in the pharmacy world, when you see a pharmacy jump up really, really fast, they get on the wavelength of the PBMs, and they have their mail order pharmacies. And what happens immediately is they'll start navigating and correcting the contracts that you have with your company, and your margins could go from a 5 to 7% down to 2. And I saw it with one of the companies that I was the board on, and they just didn't prepare well for it. So one of the things you need to do is look at how many products and services you have. And what I would suggest you guys do right now is you have that pen and pad, okay? On the left-hand side, I want you to quickly, just for 10, 15, 20 seconds, I want you to just write one word on a liability. It could be a person, a department, a product, anything. Just take 15 seconds and just write on it. And then when we come back, we're going to do one quick little asset activity. So just take 15 seconds to write one name to describe something. Okay. So kind of like Moses in the Red Sea, what you're doing right here is you're trying to part your liabilities and your assets on 2 different sides of the road, okay? So to speak, you're walking down this aisle, and it's a very hard decision because there's people's lives that are impacted in your own company as well as the patients. If you're taking on a patient population, let's just say it's HIV, and you find that your company is not profitable in there, and it's draining on you, there may be a company out there that it's more profitable that can provide the same level of services. You need to step aside and look at where can I best serve patients and where can I still make profit? Because if the profit isn't there, then you're going to close your doors. So what I want you to do is ask yourself this one question. Is this person or subject willing to change? And can they change in 90 days? Because if you have shareholders, they're going to want to know what happens next quarter. I would want to know what happens next quarter. So what you need to look at is, can that person or that subject? So when you look at those names, I want you to take another 10 seconds and write yes on the right-hand side if you think that person or that subject or that item that you're selling can change in 90 days towards a profitable aspect. And again, I'm an accounting and numbers guy, so this is how I have to do things. So look at that side, say yes or no. Give you 10 seconds. And trust your gut. So one of the things that people get wrong about people who are big on numbers like me is that we don't have a soul, okay? I have a soul. So what I have to look at, though, is I have to look at if I have 1,500 employees, I have to make sure every single one of those individuals is paid every single time they should be paid. They have their commissions, their salaries. So the first thing I would suggest is if you see somebody that's there on the no, you have to ask yourself a hard question. So I want you guys to raise your hand if you put a person or people within your organization that was a liability. Okay. Now, I want you to think about that person and be honest with their abilities. Can they turn around their profit within their department, whether it be a service, within 90 days? You don't have to answer to the group, But I want you to think about that. And if you can't, it doesn't mean you eliminate the department. It just means that maybe that person either, one, is not suited for the role, and you can reallocate them to a different department or let them go, or two, you need to find an expert and put it in there. Because basically what you have is the metrics are wrong for that department. And the biggest thing is that a lot of people are not actually looking to the market, which was stated in the last conversation. So what I would suggest you do is always go to your market. You do not have all the solutions and all the answers. Go to your clients and ask them what they're looking for, what they appreciate in other companies, and see if you, on a profit-wise, if you can actually offer that. If you cannot offer it, then you try to find another variable that you can offer within that market. You always have to be going and looking at the trends and what you can offer and what you can't. And it is in line with what the company is going to be growing into. So again, it's that change in 90 days. Who, raise your hand if it was a department or a service or product. Let's go with service or product. Was there a service or product that anybody said that they feel is a liability? Okay. What you could look at is whether or not that product or service is being marketed correctly or whether the product or service is outdated. And those are two different issues. So if it's a marketability, then you need to go to your marketing department and say, our messaging is going to the wrong people. If it's going to the right people, you get profits. People want the right products. But if it is being produced at too high, for example, we outsource our prior authorizations and financial assistance to a company outside the United States, they are paid very well in their country. But here, that person would be living on the street. So what we've been able to do is provide higher level pharmacists, technicians to oversee what's happening there so that I can pay my people more here while the people in outside America are actually getting paid very, very well. So it provides profit on both spectrums, and I get a 24/7, 365 ability to process claims across the entire spectrum, which is definitely what my company needed, okay? So basically what it is finding your target market, providing that particular services. And so I want to give you an example, okay? And I'm going to go through here. Hold on one second. So what I did in the previous company in the last 45 days is I took over the operations of 8 different companies and I looked at what was going on with them. And I did the metrics, okay? And this is what I found. They were offering, trying to help patients within across 15 different specialties. 15. Now, when we looked at it, we only found that there were 5 that were profitable. 5. So we were doing 80% of the work on 10 specialties. Now, just go ahead and answer. What level do you think would be a level 1, 2, or 3 that we were producing for patient care on those 10 that we were not profitable on? Would it be a 1? The lowest? Would it be a middle? Or would it be the highest? It was the lowest. Because everybody in that company knew that when we took on a claim or a patient care for that, it was hurting the company. And it was hurting them. It was hurting their careers. So they weren't completely invested in the patient care. So this is what we did. 45 days ago, we stopped servicing 10 of those specialties. And the owner came to me and said, I think you're going to drive my company into the ground. This is what happened in 45 days. We went in and checked the books. We now have 41% more paid claims daily. 41% in the specialty pharmacy market, retail, long-term care, and hospice. 41%. And our numbers are up 20% on a daily aspect. So our volume went up 20%, even though we stopped servicing 10 of 15 specialties. So what I'm trying to do today is really invoke some questions that you can go back to your companies. It's not to tell you that my solution is the best. It's really for you guys to look at your business and say, what am I offering that the market says doesn't work? They're not taking this from me. If you've got a shelf with 15 products on and only 5 of them are selling, why are you still doing business in the 10 different products? That's where I come in. That's where my consulting company as well, the organizations. I look across that and I say, will this provide a downfall in the company? Will it turn upside down if we walk away? Because what happens is there's a lot of people that really care that you have the care for within your company. And if you keep pushing those 10 that nobody wants, then that's an issue. Now, I'm trying to be kind of broad in general because there's so many different healthcare companies in this room, but I'm hoping that you guys understand that technology is what can actually link the two of you, okay? It can link everybody in your company, and it goes to the big word that we were speaking about, which was transparency. So I'm going to ask this. How many of you have a CRM in your company? Okay. How many of you have an expense management system? Okay. Does anybody have, who has EMRs? Okay. Just those three. There's a lot of other ones going to be involved in them. How many logins do you guys have for those? Are they 3 different logins? Raise your hand if you have 3 different logins, 3 different vendors for those. Who has 2? Who has 1? These are the leaders in technology, and those are the transparency. Okay. So whether you have it or whether you're developing it, if you can at least link those 3 things, the communication we talked about earlier, what you have right there is you have the same language, and people quickly can go in and measure your expenses versus your sales and profit, plus your patient relationships. So what I have here is, let me pull this up. I'm going to give you an example right here, and tell me if this sounds familiar. Who knows what a lifetime client value is? Okay. So I'm going to give you an example of a pharmacy. And a pharmacy goes after a provider that prescribes a drug for $5,000 a month, okay? And they're going to try to keep this patient on a drug for a year, so that's $60,000 worth of revenue, right? So if there's a 3% margin, let's say that's $150 a prescription, okay? And what that equals is annually you will make $1,800 providing care for this one patient. Now, what we're going to do is you go into that provider's office and you're trying to get 20 prescriptions. What does that equal? It equals $3,000 worth of profit a month for that. So that's the value of that provider for that sales rep for that company, okay? If you times that by 12 months, you have $36,000 worth of profit from that one client. So it's not about trying to find 10,000 clients, which is nice, but it's finding the right client. So that's $36,000 worth of profit, again, $3,000 a month. Now, how do you set your cost for your reporting within your company as well to others? You go to the rep, the VP of sales, the director of sales goes down and says, if this account can bring me $3,000 worth of profit a month, I put you on a deal of $100 a month that you can provide for services, whether it's luncheons, whether it's educational meetings, whatever it is. Now you have a metric that that account is worth $2,900 worth of profit, okay? So if you do not have technology that is able to do this for you, you need to search out there. We're currently creating it, but there's a lot of options out there. If you don't have that, you're flying blind because you're going into every single client and you don't know whether or not that client is actually going to keep you in business. I would love to help every single provider and every single patient across America. Hell, I'd love to do it internationally, but I have to understand who I can help that still allows my company to function and not just pay bills, but to increase the cash flow. And if you can do this, if you have this technology and the ability to set your individuals within your company to ask them specifically, and I could say, hey, Tom, how much is, let's say UCSF in San Francisco, how much value is that account to you? What kind of profit are we getting from them? If you can do that all the way down to the employee, the sales rep level, or the marketing level, you have a very winning solution because then they can choose and pick who they're going to provide services to. And when you choose and pick your own clients, you can provide much higher levels of healthcare. So now I want to talk about a little bit about patient care and how that affects. So if we were to look at, if you had the ability to understand that a client costs you $1,900 and that's profitable, you can set realistic goals, whether they be quarterly or annually, and then you can project in the future what other companies you will either acquire, partner with, or what additional services you'll add on. So I'll give you an example. Some pharmacies in the nation will provide what's called prior authorizations for every single prescription. That was the one-fits-all model for pharmacies, and I'm here to tell you that while I loved it and it helped us grow 5 years ago, that's not the world we live in. The overhead cost is absolutely huge. So what you need to look at is, if I'm going to spend 10 minutes on a patient that is essentially I cannot help, it's better being put in the hands of that other company that can do that. One, it doesn't make me profit, and two, it's going to confuse the patient. So really all it's about is identity. And so if you've got a strong marketing aspect where you know your circle market is, who you're going after, the next thing is reporting. So whether you're reporting to pharma, or whether you're reporting to the government, or you've got a contract, what you want to be able to do is have this technology actually make the ability for everybody to share that information with user restriction access. And what I mean by that is you need to have your technology, whatever it might be, that CRM expense, whether it's prescriptions, whether it's particular services and care, where you can actually go in and modify who can see what. And that would be that form of that privatized blockchain. And so there are a lot of options out there, but it would be very, very key for your organization. For example, we do submitting to IMS and to all of our contracts every other Saturday. It's automated. It's the same form. The issue that you run into in reporting is that every single company has their own CSV file with their own columns they need. Once you negotiate what they need, you need to have the technology and the IT development and staff to be able to configure that and put that pathway in there so it's a simple click of a button or it's automated. If you can do that, if you can have this technology within your company, every person can know profitability. And I know that scares a lot of CEOs and founders and CFOs, but I'm going to tell you right now, if you can empower your employees and teach them about the profitability of each client, each service, you will just, your business will blow up. The last company I was in, nobody even knew what the average revenue was for the average drug they were selling. They were flying blindly. So they had 178 drugs they could sell and basically provide services to patients for. They had no idea. So when I educated them on what the prices were for the drugs, what our profitability was, we stopped selling 178. We found that there were 17 drugs that we were really, really good at that patients would actually prosper from. So we stopped doing particular specialties such as osteoporosis and osteoarthritis, to which we didn't have the services to fulfill, and we were actually providing a hindrance in healthcare by taking on those claims. We stopped doing that. Once we started focusing on immunology, Hep C, MS, in infusion, that's when the tide turned. So what you need to do in accounting is sit with your CFOs and your CPAs, and what I would urge you to do is to use them as a safeguard. Have them safeguard your finances, and have your VP of sales and your CEOs sit down and basically find out, how do we drive the business while allow the CPAs to basically safeguard the money that you're making, and then also give their point of view on where they believe future markets are. That's usually what I do. You guys it's open to interpretation, but I find that when the CFOs start telling me where to invest, instead of safeguarding my money, I'm really worried about what happened with yesterday's cash flow. Where is it? And where are the safeguards? So I'm just going to open this up now. And when we're talking about contracts and reporting, one of the big questions that I'm asked about is 340B. So I don't know is everybody familiar with 340B? Okay, so I'm just going to speak on this because pharmacy is my go-to. So 340B can be a very hard wave to navigate in healthcare, because what you have here is you have hospitals trying to make profits, okay? And by not employing, say, 25 people within a pharmacy, they contract out with another pharmacy, patients get their drugs at a discounted rate. And everything seems fine. But the problem is, with any contract, is you cannot just offer a contract, and I would highly suggest not do this, with one vendor. You have to go with multiple vendors and find out what each vendor is good at and supply them just that. So whether it's a healthcare contract, a 340B contract, a limited distribution, a home healthcare contract, you find out the person who does these couple of things the best, you contract with them, and then the metrics that you can grade and that they report to you and you report to them is so much easier. So if I'm asking this gentleman in his organization to follow this one particular aspect, my metrics are very, very easy to handle. Does that make sense? Am I losing everybody? Okay. So what I wanted to do is, I've now covered a lot of aspects on profit and money. Again, I do have a soul, but I'm a numbers guy. So what I would like to do is open it up to any questions that you guys might have within your organizations you may find as a struggle. I would look at them as an opportunity. And I'd like to do something different. Instead of me just answering it, if someone else in this room has a good solution, I'd like that person to stand up and actually give their opinion, just for a couple of minutes while we conclude. But this will conclude my presentation, but I'd like everybody just to throw some questions out there about how to grow your company and how to provide better health care. Anything? Go ahead. Products that we slash? Okay, so you're talking about what happens to those patients or services. So I'll give you an example. And I just want to walk around. With osteoporosis, the average drug cost is anywhere from $600 to $800. My company cannot operate at $600 to $800 revenue. It has to operate around $2,500 to $30,000 per patient, okay? Because the margins are so low. So what we do with that particular case is, with that patient, with those patients, we continue to service them. We continue to service them, but we don't take any new patients on. So it's not walking away from an entire public, because the initial patient, getting them onboarded, is where the overhead cost is big. Maintenance and adherence is not an issue for me. It's taking on that new patient and navigating through healthcare. So I don't just walk away from a patient and say, hey, go find your drug and service it from somewhere else. What I do, though, is I go directly to the providers, the health plans, and say, we'll no longer be servicing this because your reimbursements to our organization, you know they're way down. And half the time, just so you guys know about healthcare, the plan doesn't even know. There's no transparency between health plans and PBMs and pharmacies. Nobody's sharing anything. Okay, so the problem that you have there is you got to go to the providers and the health plan to say you're not going to start a new patient or this service, but what you can do is you can cushion that blow and not completely walk away from an entire relationship and say, I'll continue to service this patient, but I'm going to let you know I won't be doing this for any new patients in the future.
Isn't the real liability of what you're referring to is the contract with the payer, whoever that might be. Delivering the system, as I hear you say it, is only a operational protocol. Pharmacies have the standard through the NCPDP, so that's very transparent. The insurance companies look at the reimbursement. They can change that in 90 days. So what you're feeling about the real liability being the contract, the payer, and their ability to change those terms within 90 days.
It's a good question. Who thinks that they can navigate a contract to be more preferable for their organization? Has anybody dealt with health plans or PBMs? Has anybody had success in that? I would say the fact that we have probably the biggest M&A happening within pharmacies across the nation we've ever seen is a point where pharmacies are going out of business and having to sell due to the PBMs and health plans. So for me, I have to look at the bottom line, and I have to say what is profitable for my organization if the health plan won't allow that to me. What I do is I don't just walk away, I also offer an alternative. I offer an alternative to things they may not have me covered for, such as an infusion contract with them. So I asked them, would they mind allowing me taking on an infusion, because that's my particular specialty, and that's how I propose it to them, in the PBM. And we've gained ground in there, and that's basically the carve-outs. So if they tell me I have to stay on and continue servicing something that I don't want to, that's not profitable, I go back and renegotiate a better profit margin for the areas where I know that is my major book of business, where I can help and make an impact in healthcare. Sometimes it works and sometimes it doesn't. But coming from my side, not so much. That's why we're actually creating a PBM for transparency based upon, instead of MAC listing, basic just profit and cost, and putting a percentage across the board and sharing that across the entire organization. The health plan, the provider, everybody knows where the profit is coming from, So nobody has any questions about whether or not my profits are higher, this plan is not taking that much, or how much a PBM is taking. Is it 8%, is it 10, is it 12, is it 15%? If it was all transparent across the board, then it would be a lot, in my opinion, it would be a lot better. Do you guys disagree with that? Any last, oh, go ahead.
I kind of want to go back to what you said of how to, I'm pretty loud, but okay. I want to go back to how you said to become more profitable. I work with autistic kids, so in my opinion, healthcare is becoming transactional versus personal, and I don't think profit is the gold star of a healthcare company. I don't think CEOs of healthcare companies should be making millions and millions of dollars. If they're in that for that, then they should go out. I think it should be about a well-rounded situation for the client. So, for example, if someone has cancer in your family, I think that this facility that's treating the person with cancer should also have mental health counseling. They should also have any other resources that that family may need. And maybe it's not the most profitable, way to do it, but I think it's the best personal way to do it. And I think that that's how people heal. And I think that healthcare has become transactional. You go to see a psychiatrist, oh, you have this, you have this, you have this, here's 5 prescriptions, right? They don't even talk to you. Yeah. And that has changed over the years. And that's just my opinion. And I hear profit. I don't, personally, I don't care if I make $2 million in the year. If I make $100,000, $150,000, I'm happy. As long as the clients get everything that they need. So that's my opinion. Just this is International Forum of Advancements in Healthcare, right? Mm-hmm. So advancements in healthcare, I think, should be less transactional and more personal and more well-rounded. Yeah. Just my opinion, that's it.
Yeah. So I'm just going to conclude with this. I totally believe in what you're saying, and all I'm trying to explain is that I believe that we can provide better care for individuals if we're not offering so many things in different things. So it's autism versus cancer. What I would suggest for organizations is to say, how can I offer more services? You do have to look at the bottom line and say, where can I provide this money? Because I want to offer another service, okay? So the last thing I'll leave you with is ancillary supplies for our cancer patients when we ship them out. Okay, we take the financial hit on that. I'm totally okay with that. But what I have to see is where in my organization can I find that extra money so I can supply that? And so what I did is I cut out a particular area where I knew that I wasn't providing good care, okay? And so when I walked away from not providing good care, I realized I provided better care in these particular 5 specialties. And maybe I said it a little bit wrong, but this is exactly what I'm trying to go towards, is that don't offer 10, 15, 20 different types of patients. Focus on, like, you're doing autism, focus on autism. Focus on rheumatoid arthritis, ankylosing spondylitis, whatever it might be through arthritis, or MS. And I think that's the major focus that we have the issue with a lot of organizations. Unless you're a CVS that has millions, sounds like millions of employees, and they can do that because they have so many different things, none of us are CVS. So I would highly suggest a lot of us pick that particular area and provide the greatest level of care. Absolutely, absolutely. So what I wanted to do is, I know I said profit a lot, but the profit allows me to provide greater trust and more one-on-one interaction with a clinic, with a hospital, with anybody that I do, because now I'm centered on that particular patient demographic. I know their foundations, I know the sources, I know the nursing coordinators, and what helps me is I make them more profitable and they can provide more services, more on-call, more employees. So thanks for bringing that home. All right, thanks everyone.